Welcome back to October's portfolio update. So, just to give you a recap, last month my portfolio was sat at 11,527, currently up to 12,408. Last month I had invested 12,000. I've basically invested £800 last month, so from the start of last month to now, £800 being invested. Last month I was currently down 3.96%. We're now at just over 3%, so it's come down almost 0.9%, and pretty much up £100. So last month we were like £490. We're now £390 in the hole. So let's look at this. So let's just give a recap. £800 gone in the last 30 days, probably more than 30 days now. Pretty much a lot of it is in the red, I'm not going to lie. Last month was my first month of earning £50. So that is looking pretty good. We're almost at the end of the year. So this is October's portfolio update. It's currently the start of November. So 2 more months left, and it's been a whole year of investing. So almost, I would like to hit 15 for the year, but I think I'm going to hit 13. So, but 13 is still decent. 13,000 in a year is pretty good going for investing. If I can keep that up every year, then I think I'll be in a good place when I reach 40. So yeah, like I said, a lot of stuff is in the red, but a lot of this is the almost daily dividend pie. So the almost daily dividend pie is a separate thing. It's a pie that is invested into 50 companies. So that's what a lot of these are. But so if they're around the £50 mark, they're all basically the almost daily dividends pie. So RBV, that is pretty much a individual stock. So when I do have spare change, I chuck it into that. Ultra is a big one of mine, 1,500 in Ultra of 46 shares. That's currently down pretty much almost 7%. That's £113. So this one I'm kind of on the fence with. Do I sell it or do I keep it? It is bringing in good dividends for myself. It was on auto invest, so every time it paid dividends, it reinvested it. I've just turned that off, so the dividends I earn from that, I might just start chucking into a more stable company. I don't know where Ultra is going in the future. It is a nicotine based company at the moment, but there is talks of it is developing other products. But like I said, this has constantly been on the decline for a while now, with nicotine having a bad rep in the media and in life in general. So if you drop in the comments what you think I should do with this, buy it, keep it, or sell it, and your reasons why. And maybe I'll do another video on that in the future. Apple, I think that's an individual one, but again, that's just there with 50. AT&T, I had money in that, but I sold that a couple of months back. Aviva, so this is a UK insurance firm. I've started piling money into this slowly. So I've got Legal & General is a big one. I've got over 100 shares in that, and I got 100 shares in this as well. Those are both solid companies. Again, that's currently up 3.5%, like £10. Bank of America, that's another individual share of mine. That's currently up 20 pence. So I got almost £100 in this. So I might get that. I might round that up to 100. Hopefully get that to 5 shares. BHP, that is another individual one, which is currently doing well. It seems like all my almost daily dividend pie shares are pretty much in the red, apart from Coca-Cola, that's currently down 3.86%. Again, this is one of my growth shares, 5 shares in Coca-Cola. Again, this is just auto invest on this, and also if I do have some spare extra cash, this is one of the companies I do put some money on. This is a long-term thing, Coca-Cola. It's been around longer than I've been alive, and probably most of you have been alive, so it's a pretty solid company, and it's still around now and still growing. This is a new one I've just started investing into. It's not long come on to trading 212, I don't think. So QYLD is the American one, and then the QYLP is basically the UK version, exactly the same thing. It's just a UK version, so for myself it is tax free. With this one, the dividends I earn from that, it is taxed. So I started buying into this, and then I found the UK version. So I stopped investing into this, started investing into this. This one is currently, obviously it's closed now for the weekend, but this is for sale. Once that sells, it will go into the UK one. And that, again, that's just to dodge the tax I would be paying on it. Because this is my ISA, I don't get taxed on my earnings, so that's why, unless it is a US company, so that's why I'm trying to convert that into my UK one, so I can skip on the tax coming off that. But this is one I'll be growing massively going forward, trying to get more into the ETFs and the basically the guaranteed ones, try and step back out of all these companies and then pump all my money into this and like the S&P 500 going forward. Like I said, Legal & General is another big one of mine, £300. I got 144 shares of this. Again, this is just auto invest, and I'm going to keep growing this going forward. Main Street Capital, £100 in that, 5 shares, almost 6 shares. That's doing pretty well. That's up 2.5%. This one, I am basically investing £1 a day for a year into this company. That will be a separate video coming out soon. But yeah, that's pretty much just a little thing I'm doing, a experiment to see how investing daily and also into a monthly paying dividend company, how that looks down the line. So maybe in the future I will increase it from £1 to £2 and then maybe up to £5, just depending on how my income looks going forward. Microsoft, again, this is just a growth stock of mine, only 2 shares, and I've invested £800, so it's pretty high, but it's also doing quite well as well. So if I invested £800 into like other companies, I could be around like 50 to 100 shares, but Microsoft, I've only got 2 shares in Microsoft. This is a growth stock of mine. Like I said, if I do have some extra cash, this is one of the companies I invest into. It's doing really well, up 28%. So it's quite hard to buy into this because I'm basically buying into it at a high when you really want to be buying into a low, but I'm not too bothered because, like I said, it's a growth stock of mine, so I'll be chipping into it, going whenever I can, really. Um, Reality income, again, that's not doing so well, but hopefully it keeps climbing. This is again something I just keep piling my money into because it's currently down at the moment. Like I said, down 14%. Um, as you see there, that dotted line is my average. So while it's low, I'm just pounding the money into it. So try and get that average as low as possible. So if we scroll down here, so yeah, the average price I normally pay is around $60. It's currently at 50. So I'm pretty much getting a $10 savings for every share I buy of Reality Income. So this is something I'm, like I said, pumping my money into Reality Income. And again, it is a monthly paying company. So hopefully that just keeps climbing. It looks like it is coming out of that hole slowly, I hope. Yeah, so it was down here at 46, slowly coming up to 50. I just hope it keeps climbing and I get back into that green, hopefully. But like I said, that's not going anywhere anytime in the future. So this is my FTSE All World High Dividend Yield portfolio. Basically 3,700 in this, currently down 0.70%, which is £27. But again, nothing I'm worried about. This is a ETF I'm going to be pumping my money into, the same as the QYLP, so the covered calls. That's another one where I want to be around here with that. So once this hits 100 shares, everything will be going into the QYLP to get that up to roughly the same thing, 100 shares going forward. And then hopefully, how much is that? 50. So it's currently about £46 a share. With this, I think I'm basically getting a free share every time I earn dividends on this. So every time they pay me dividends, it's basically buying me a free share now. So that's what I want going forward is with the dividends. When I get paid dividends, it basically buys a share for me. So I start getting free shares down the line. That's the end goal, especially for the FTSE and the QYLP, so my ETFs. I want that to start doing the work for me going forward. Same with Reality Income. If I can get that to buy me a free share every time, like I said, that's currently at $50. I think every month it pays me about $15 at the moment. So I need to put more money into this to get that anywhere near earning a free share every time I get paid dividends. But that's what my individual shares are looking like. If we look at my dividends, so in total, so far this year, I've earned a total of £230 in dividends. So not too bad. I'm pretty happy with that for my first year. Hopefully next year that will double. What are we looking at? October. So yeah, looking at October, first dividend coming on the 2nd of October. That was Coca-Cola. Like I said, that got auto invested straight back into Coca-Cola. £1 is nothing, but it's something. And like I said, Coca-Cola is a growth stock of mine, so £1 every 3 months is fine. That's going to keep building, and then maybe in 20 years' time, that'll be £100. Who knows? All this is the daily, almost daily dividend pie. So literally every day, I'm basically getting some kind of dividend from the almost daily dividend pie. Ultra, like I said, £30 there of dividends. That one got auto invested. Then I turned her off after that, and now I'm on the fence of to keep it or to sell it. So £30 a month, that not a month, every quarter. That's not too bad, but like I said, that stock is dropping, and the last thing I want to do is, yes, it's all good earning £30, so £120 a year from this dividend, but I've got over £1,000 in that company. The last thing I want is that company to drop so much, then I lose all my money, and the most I've earned is £300 in dividends. So I'll be pretty much out £800 in total if I earned, let's say, maybe £200 in dividends and I lost all my shares. So that's where I am with Ultra at the moment. Reality income, like I said, almost £10 in reality income, and that is what I'm getting every month. So £10 a month. So basically, every 5 months, I'm getting a free share. I want to get that as low as possible, where every month I'm getting a free share. That is the end goal. Main Street Capital, again, like I said, that is a brand or a company I'm paying £1 a day into, and that's currently almost paying me £1 a month in dividends. So it's not too bad. All this is almost daily dividend pie. So you can see the almost daily dividend pie, I'm getting between 10 pence to 20 pence. Some companies are paying me 50 pence. So it does add up. Like, look at that. On the last day of October, I got all this coming from the almost daily dividends pie. So it is a great pie to be invested into. I want to have so much money in there where every company's paying me £1. That would be perfect. And then, like I said, pretty much every month, that'll constantly get reinvested. So it needs £50 to auto invest the money. So if every company's paying me £1, then pretty much every month it's just getting added £50 every month. So not bad going forward. And again, that was keep doubling. It'd be £2. It'd be £100 a month getting reinvested, then 150, then 200, and so on. And obviously this is the start of November then, but that is for another day. But again, thanks for watching. Hopefully you enjoyed this video. Just a little insight into my portfolio, and I'll see you next month's video.